Good day. This is the Eye of the Storm podcast with the weekly update for the S&P 500 being recorded on Sunday, June the 9th, 2024. I'm going to start here with the cash market, and I'm taking a look at the weekly chart. There are not any changes to be made to the longer term count. So starting there and on the preferred count, we remain within a primary fifth wave up, and that primary fifth wave began on October of 2022. Within that, we will have 5 waves of intermediate degree, of which intermediate 1 and 2 are complete, and we will remain within that intermediate third wave. Inside of intermediate wave 3 will be 5 waves of minor degree, of which minor 1 and 2 are complete, and we remain towards the end stage of minor wave 3. So within minor wave 3, we will have 5 waves of minute degree, of which we have 1, 2, 3, and 4 complete, and we remain within minute wave 5 of minor of wave 3. So we're close to getting to the top of that minor third wave. And so what we've done so far, and I'm going to immediately start to bring this down, and we're going to move it all the way down to a 4-hour chart so that I can get inside. Well, let me just kind of look at the daily chart. And one more. I still got to go out to that 5 years. So we can see that we have 1, 2, 3, 4 on a minute degree. And so we've run our fibs for a minute wave 5. And we've also run fibs for the extent of what we can expect, possibly, for a minor third wave, just a straight Elliott calculation, a fib calculation of where wave 3 would be equal to 3.618 of minor wave 1. So it's quite a large third wave, which it should be. So now I'm going to move back down, and we're going to take a look at the 4-hour chart. Let's get inside. So we have that minute wave 3, minute wave 4. And minute wave 4 completed at the April expiration. So April the 19th is when we hit that low, and that was at 49.53. Then we launched higher, and we have minuet wave 1, 2, 3, and 4. Now, wave 4 completed on the 31st of May, and that completed down at 52.35. Now, from that level, we are starting to move within, or looks like we possibly could have completed. Let me drop this down to the 1-hour chart, and here we sit within. So we'll just kind of scoot this over a little bit. Here is minuet wave 3. Here is minuet wave 4. So what we have within that minuet wave 5, we have wave 1 of 5, 2 of 5, possibly 3 of 5 there, although I'm more than likely going to move it to here. So this is where, as in the NASDAQ, things start to get a little bit, I'm going to use the word cloudy, because it's like, wow, what really do we have going on when we have 1, 2, and then 1, 2, 3, 4, 5 of 3, 4, 5, possibly, or 1, 2, 1, 2, 3, 4, 5 of 3, and we're in 4. So it's in a sub-minuet wave 4. And if that's the case, what can we look for here? We're just going to run some fibs quickly. So we can see we're 0.236 is 53.42. And then we have the most common, which would be 382, and that's at 53.21. And then right below that is the hourly 50 moving average. So can we expect some additional downside and then still a rally up? Now, if we balance this against what we're waiting for next week, there's nothing really coming out on Monday or Tuesday. NVIDIA has already done the split. So volatility may be kind of less, dried up a little bit in how much NVIDIA will be contributing to the overall move within the indexes. And so granted that the latest move has put NVIDIA number 2, Microsoft being the heaviest weighted in both the S&P and I believe in the definitely in the NASDAQ, I believe also in the S&P. But then we also have now NVIDIA is number 2 in the NASDAQ. I'd have to double check to make sure that if it's number 2 in the S&P, but it does carry a fair weighting. And if it's overtaken Apple, then it's likely in the NASDAQ, it's also likely it's overtaken Apple in the S&P. So again, what really I'm making reference to is NVIDIA was moving 30, 40, 50, $60 a day prior to the split. And so that would equate down to a 30, 40, maybe $50 move, but it's going to turn into $4, $5, or $6 after the split. So that part is going to slow the volatility, slow the price range, start to contract things a little bit. Now, if we take that, add to it that we don't really have anything until Wednesday of next week, where we get CPI number first thing in the morning before market opens. Then at 2 p.m., we have the Fed decision. Now, base that on what we saw happen last week after the European Central Bank and the Canadian Central Bank both cut rates. So the expectation was it's like, oh, the U.S. has got to do it. U.S. has got to do it. They'll be right there behind the other two. So why wouldn't they? And then we got our employment data, which showed that, yep, economy is operating on a lot of cylinders and a lot of people are finding jobs. Whether they're changing jobs or whether they're coming off unemployment, I don't know. But the wage inflation is what became a stick in the spokes of an ongoing rally and the thought that the Fed will have to cut. Now, doesn't mean that we won't maybe be expecting it a little bit later this year, but I don't think, and I really wasn't expecting them to do anything next Wednesday at the June meeting. But the fact that the market reacted so strongly from the cut in the European Central Bank and then also the one from Canada, that the bonds really picked up and they rallied strongly. Then we got the employment data on Friday and the bonds were down heavy. The 30-year bond dropped over almost 2 points during our regular session. Excuse me. So what does that suggest? It suggests that they're not going to be planning on looking for a rate cut on Wednesday. Now, what really it's going to depend on, and this is what I felt even before hearing that the Central Bank of Canada and the European Central Bank cut their rate, was that the Fed would probably maintain current policy and leave it unchanged. And because I don't know if they have enough evidence that inflation is definitively under control. So what's really going to become important is the press conference. What will Powell be talking about? And how will he present it to the markets? Is he going to be dovish or is he going to be hawkish? So that's kind of what I think the market's going to hang up on or wait for. And maybe we'll get a reaction off of CPI. If CPI comes in really nice and, showing that inflation isn't a problem, that we continue to get control over it, that we see continually start to continue to decline, at least on a consumer level, which those of us that live in this world realize that that's not really happening. In terms of, our utilities, our price of gas, food. So they may still show a better number because food and energy are always excluded. So, it is however it gets interpreted. But I think more important will be what Powell actually presents it and how he presents it. Will he be more hawkish or more dovish? And the market will pick up on that really quickly. So Monday, Tuesday, would I expect the market to go up and make an additional high and complete Minuet Wave 5? if it isn't already done, to put that completion point in? Or do we start to drift lower and then get a reasonably good CPI reading and then rally up, and then the Fed, and then maybe drop out of that? That's also a possibility. Bottom line is, it's like, while the market may not, I don't believe, has reached its high, in the NASDAQ versus on the cash market, it was easier to see the possibility that we did complete. So we can have wave 1, 2, 3, 4, 5. But that just completes wave 3. So even if I go 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5 of 3. So I can try this 1, 2, 1, 2, 3, 4, 5 of 3. Okay, 4, 5 of minuet, wave 5 of minute, wave 5 of minor, wave 3. So there is that same possibility that it could be done there. I'm not going to bet my bottom dollar on it, to tell you the truth. I think that we still have the potential that we're going to go down and then rally up and then finish that third wave and then begin our minor fourth wave. Now, again, with that in mind, going back out to the 4-hour, here is the territory of that correction. So once we finish minor wave 3 and we're looking for that minor 4, there's the territory. So it's should drop into the territory of the fourth wave of one lesser degree, and that would be the minute fourth wave. So again, what we're looking at is that April low, the April expiration low. That's the territory where I think that the minor fourth wave can come in. Now, it might exceed it. We will have much more information once we do have the high, and then I can connect all the way up for retracement levels. Don't have it yet, so I can't really determine, is it going to be done from the current high, which is right there at 53.75, or are we going to move up a little bit further and end up somewhere up in here above 5,400 before all is said and done? That may happen as well. So cash market also sitting on the fence as to whether minuet wave 5 is done. So I have to leave all that open. So in any case, if it is only wave 3 in the internal third, the sub-minuet, I'm looking for sub-minuet wave 4, well, there's our markers. 53.42, 53.21 coming down. And we've already hit 53.42. We've already hit that one. Bounced off of it, but came back down. So I think we still have a little bit more to do and come as low as 53.21 and then rally again. Whether this all happens before Wednesday, to be determined. So that's kind of the cash market. The moving averages are not looking that bad. Here's the 200 still pointing higher. The 50 starting to kind of determine if it wants to go flat or continue to move higher. We have the 13 and the 20 both flat with slight downward bias. So again, mixed picture, but not totally excluding that we can't go back up before beginning a little bit larger minor fourth wave. So that's the cash. Let's go over and take a look and see what the futures market is telling us. It is much more clouded. But even if I were to go here, again, same thing. Now we're up to, there's the minuet fourth wave, and that comes in at the end of May, the last day of May, actually. And then we start our minuet fifth wave up. So we have 1, 2, and then we subdivide 1, 2, 3, 4. If anything, this is 5 of 3. Accordingly, I'm leaving it open because it just is too mixed to really just say. But if I were to put it in, then I'd have to put a 4 and then the 3 up here. So it'd be looking like this. The 4 and then the 3. And so that would then suggest that we're in this sub minuet wave 4. And then that being the case, where we measure for that is as so. We're going to add those, and that would put it right there. And then, so what do we have? The same deal. Now, here we came down in this 4th wave. We might come right back down and revisit it because, right, 4th wave of a sub minuet will find its bottom or its range within the 4th wave of a lesser degree, which is right here. So again, we're looking to come back down in between here and here. We've already reached that first level, closed right at it. So either we go up from here, and then that would suggest that we are within this the final 5th up to complete everything, moving higher, and set it up for that a little bit larger minor 4th wave. Now, just to kind of fill in those blanks, we have the minor 4, then a minor 5th wave up, and then that completes intermediate wave 3. And then we have an intermediate 4th wave down, and then we have an intermediate 5th wave up. So we got a lot more to do, actually. I say quite a bit more to do. Both downside would be limited, upside should continue to reach new highs. So at least 2, and of those higher degrees. So we have the ability to, we will be dropping down in a minor wave 4, go up in a minor 5th wave, come back down, finish an intermediate 3rd, come back down in an intermediate 4th wave, so a little bit larger, which, by the way, is, if I just take this back out and we just take a look here, right? So this being the area for the minor 4th wave. So let's say that minor 4th wave comes in at 49.53, right around that same area. 5,000. Let's say 5,000. And then we go back up and we finish intermediate wave 3. Intermediate wave 4 would be expected to come, if minor wave 4 ends up here, intermediate wave 4 should be coming back. So we basically have 3 legs that might just find their support, or the 2 corrections that we're looking for, find their support in the same area. So we could remain above 5,000 for a while. That's kind of my main point. Here is zone number 1, right? Previous 4th. But so, we're finishing a minuet wave 5, and that's going to complete a minute wave 5. So we're not going to come down into this zone because minute wave 5 then completes intermediate wave 3. So what happens after that? Well, minor wave 3 expected here. Now, it could go further than this low, but that's the anticipation right now. Doesn't mean that it has to stop there. It depends on what's actually going on. And the degree suggests here. Down below, it's not going to make any difference because then we go to the fibs, but the rally back up to finish then intermediate wave 3 would be expected intermediate wave 4 to come back down to that same area. But it'll depend again on where it all ends up. But right now, this is kind of what we're looking at. Right around the 5,000 area, pretty much. So let's get back down to what we think can happen next week, because that is really going to be the catch right now. So if we go back to the hourly chart and we take a look inside of this thing, it just is not, it's very sloppy. And again, taking into reference what I just said about NVIDIA, they're done. The split has happened. Stock's going to open somewhere around 120, 121 tomorrow. So how much pull would that have on the S&P if it kind of hangs out there? Maybe it moves up $1, down $1. it's going to have a lot less influence on the volatility of the index. So what will continue will be Apple, NVIDIA, Microsoft, Meta. So if everyone continues to just kind of go, okay, we're going to go higher, well, then we move from here, we get up and we finish this whole shebang. Now, what do we show for fibs? The 1.618 for that one is done. So I can't use that anymore. And so I'm going to actually take that out because wave 3 is over. If it completed there, then wave 3 is done. So what we got to look for in this and this wave, oops, I did that one wrong, didn't I? And if wave 5 is done, then we're done with this rally as well. Right, so I got to take that out. So what do we have? What can we put back up there to determine where can we go from here? Well, we have this one. Let's see what we got. 5,400. So interestingly enough, I can do the following, and this is actually just a guesstimate because we have no idea yet where wave 4. But let's say wave 4 completes there. Well, what we got is 618 at 54.17, 100% at 54.58. So we're above 5,400. Now we have to consider, can the market really do that pre-Fed? It could. It definitely could. And then it's done, and then we'd be looking for the news to kind of pull the market lower on Wednesday. Thursday also we have initial jobless claims and PPI. So it's all boxed into 2 days for next week anyway. So we could get a lot of sideways and then maybe a push to finish, and then we drop down. Now I'm going to take this one and let's just, okay, it's right here. And we're going to activate it, and I'm going to pull this guy lower. No. All right, let's just do, that's for the, sorry. I am going to pull that one off, and I'm going to go to this one. This is the one I meant to move. And we're going to activate it, and I'm going to pull it down just in case we come down to here. What's it look like there? Well, 53.97, still 5,400. But here's the 100%, which is the most common, 54.38. So no matter what, as is, the market is suggesting is like, no, we're going to go up. We may even drop down to 53.38 or 32, but we're looking to go up, not necessarily down. So I'm going to take that off because I don't have that level yet. And so, but I'm from either level, I'm expecting if it's going to finish, unless wave 5 all the way up to that minor 3 is complete, which we would get that hint if we walk in on tomorrow morning or even at the start of Globex this afternoon, that we just start to drop pretty heavily. And we start breaking below 53, excuse me, 5,300, 53.15, that negates a fourth wave, and then would lean very heavily that we're done. That this is a 3, that, you know, it would have to work itself out, but I would mark this as the completion point for minuet, wave 5, minute wave 5, minor 3, and we're heading towards that larger fourth wave, which again projects down to here. So the conundrum right now is like, where's this all going to finish? This volatility was just really NVIDIA driven, plus a couple other, you know, stocks in between. And this was a lot of just expiration. So this actually was Friday morning. And then we got into the afternoon session, and it just ticked down, all due to, I believe, Friday's expiration. That's all now done. Do we revert and go back up and finish before Wednesday? Or if we continue to come down and we break that level, then we're going to take it that it's done and we're into that larger correction. All right, that's really about it. Again, let me just reiterate what we got going on in terms of economic data. Nothing really. Monday, there's nothing. Tuesday, we have the NFIB Optimism Index. Okay. And then Wednesday, we have consumer price and the Fed, along with the federal budget. Okay. And the federal budget has increased or decreased. Thursday, initial jobless claims, producer prices. Friday, import price and consumer sentiment. So we have market movers more on Wednesday and Thursday than the other days. Again, the big thing is going to be what happens on Wednesday with the Fed and how Powell presents his press conference. Again, is it going to be more hawkish? Is it going to be more dovish? That's going to be the big take, the big give. So until then, the next Elliott Wave daily update will be on Monday, June the 10th. And I wish everybody a great balance of the weekend and a great trading start. Wow, let me start that one over. And I wish everybody a great trading start to the week.